Welcome to the Broken Pie Chart Podcast, episode 200 and what is this, Jay?
It's
93.
It's 293.
Oh, you should host this one then. I think this is the one you host.
I should. All right, I'll host this one. Welcome to the Broken Pie Chart, episode number 293. I'm your host, Jay Pestrichelli. With me today is my fairly consistently always co-host, Derek Moore. Derek, how you doing today?
Jay, doing well. See, that wasn't so bad, right?
That was not bad. All right, I relinquish the hosting responsibilities. Take it away.
All right. Well, you also know what else wasn't bad today? Unemployment. Like, oh, we were worried about this. Now apparently not, Jay.
It was a good number, right? Projection of 150,000 new jobs came in at just, 250? Good stuff. And actually digging into the numbers even a little better than we thought, right, Derek? Like, it was more folks employed. Like, that was a pretty high number, right? The employed number, like the change from August to September, right?
Yeah. I mean, when you look at the data, so the way they get the unemployment number is they go and they say, well, how many people are unemployed versus the working age population? So last time there was more unemployed. So it went from, and this is in thousands, but we'll, just add zeros.
Add three zeros, right?
Yeah. But last time it went from 7,163 with the zeros on the end to 7,115. So unemployment actually went down last time too. The unemployment this time went down by 281,000 and employed went up 430,000. The reason why it didn't go from 4.2 to under 4.1, and there's some rounding there, is because, again, the size of the labor force increased. So, yeah, I mean, Jay, I think this was a pleasant surprise, actually.
And the initial reaction out of the market was, oh, things are good, so we're not going to get as many rate cuts, so the market dropped, right? The initial reaction was fairly, gapped up, right? So there's like, oh, good number. Market sells off for the first, hour, and then proceeds to rebound and then some throughout the rest of the day on Friday. So, yeah, it was an interesting reaction, I think, as folks realize, like, hey, good news is actually good news. The Fed still can be in a rate cutting mode, right? Maybe just not as fast. And I love it if they stretch out these rate cuts as long as they can, because as they're in a cutting mode, it's generally you don't fight the Fed. It's generally a good thing for the equities market. So, yeah. And speaking of which, probabilities changed dramatically after this report. The number I look at, and I know we look at different sources, says there's now a 99% chance of only one cut, 0% chance of two. Like, that's off the table. Last week, right? I think I could look at last week. Last week, the two cut rate was 50%, I think. A week ago. So, a week ago, it was 53% chance. So, now it's, goodbye, not happening. So very interesting data today.
Yeah. I mean, I think it was on the 25th of September, what I was looking at, it was pretty much baked in. Well, just like last time, it was about a 61% probability, just going back to the September 25th, of two 25 basis point cuts. So another 50. Yeah. Like, here's the thing, though. Why do you want, I'm not saying you, the proverbial you, why do you want interest rate cuts? Like, if the Fed has to be cutting, that implies that there is weakness. You actually want the Fed to be like, oh, this economy is so good, we might have to raise because everyone's doing so good and equity markets are doing so good and blah, blah, blah. This is good news. Good news is good news. Like, get over it, market.
Well, I think that was the reaction for today. Like, people digested and said, okay, this is okay to push things a little higher. So rates went, the 10-year went up today, bonds went down today, right? It was one of those things where the expectation of, lower rates and higher bonds kind of pulled off. And let me take a look. We watch utilities from time to time. That was down today, down bigger at the open. But then it's interesting. They had this little, push along the way as equities recovered. Might have had something to do with, AI having a good day, but that's a whole different conversation,
Well,
right? The ticker AI was up 4.5% today because they got a new kind of new valuation. So, yeah, interesting stuff going on there.
Well, I mean, you mentioned the 10-year, and from memory, it was about 3.7% was the yield on the 10-year. Today, if I look where we closed, 3.97. So the 10-year yield has gone up since the Fed cut 50 basis points. And Jay, we told people to keep an eye on this. Like, just because the Fed is cutting doesn't mean that long end rates are going down. They might go down. I'll let you know. But we gave you the case from 95 where the rates went from 6 to 7. So
even though the Fed was cutting.
Even though the Fed was cutting.
Yeah.
So
the long end is just different. It's different. They're not the same. All bonds do not move the same.
So we are still inverted. The 3-month is 4.65. The 10-year is 3.96. So the inversion is still roughly 60, what is that? 67, 68 basis points?
Yeah.
Okay.
How about all the way to the 5? So you did against the 10, right? Against the 5-year, it's even more inverted, right? That's like 3.6.
The belly of the curve, yeah.
Yeah.
Yeah, 5s.
Yeah. Well, look, we watched that. But in general, it feels like if you're looking for yield, like we do in some of our options-based strategies, staying on the shorter end of the curve seems like the place to be.
It's one of those things too where everyone thinks mortgage rates are coming down. The reason let's assume that rates stay where they are right now, and that's a pretty big assumption. When I'm saying rates, the 10-year yield, let's round it up to 4. You would expect 4 plus 1.7, the typical spread between the 10-year and the 30-year mortgage rate. You would expect mortgage rates then to be right around 5.7. What's happened is the spread between the 10-year yield and mortgage rates has expanded. I've seen it, as high on the upper end recently of 300 basis points. So just that compression could bring mortgage rates down. They probably should be further down. But if the 10-year goes up more, you could have a Fed cutting and mortgage rates not necessarily budge that much. I think there's some assumptions that are baked in, and I'm not sure people are thinking this through completely. I could be wrong, though.
Yep.
All right. So I want to talk about interest rates. All right. We got to talk about the ports.
I know. If this was like Christmas for you this week.
Oh, yeah. I have 7 hours of analysis here. Where do you want me to start?
Let's start with the last 5 minutes of your analysis.
Yeah. So everyone hoarded, and they went to Costco, apparently on the East Coast, and they cleaned out the shelves. But the strike is no more. They came to an agreement. So
what are you saying? They ran out of toilet paper again in New Jersey?
I think that was, people were putting stuff on there.
All right.
So I don't know. You know what's interesting with the ports too? So I read, and I haven't looked at this agreement, to be honest with you. It's been kind of a busy trading day. But they were fighting automation. Remember when the actors or the writers were on strike? And they're like, oh, we want it that you can't use automation, can't use AI to write a script. I think they were fighting a lot of the automation. In fact, ports, I was reading something else in China. I think they use autonomous vehicles in some of those. And it's just all computers and things like that. So, I mean, and I don't know if you saw this too. You're a fellow person who used to live in Jersey. There are things called toll booths. And I know most of the country can't even imagine this, but drive on the Garden State Parkway, it's, what is it, every couple of miles it felt like they would want some money to continue down the road. Imagine that.
Yeah, but that's been gone for quite a while now with the Easy Pass stuff.
But you mentioned Easy Pass. Do you know the unions fought the same guy who was, I think he was the guy who was quoted in the media. They dug up some old stuff where he's like, I don't know about this Easy Pass, like think about the workers too. We got to think about it. The union's like, Yeah, no, we don't think you should use Easy Pass. We think you should keep those workers there. Like they fought automation. In fact, in that book, The Box by Levinson, my favorite container shipping historical book, and everyone should read that. They talked about different periods where the unions fought, where they didn't want them to use cranes, or they didn't want to, they wanted to be able to unload and load using people rather than using automation. So, anyway. No thoughts on that?
Yes, I'm trying to come up with something that doesn't seem like, insensitive to the people that work on the docks, right? It's just, look, things advance. That's part of the thing that drives efficiency. Markets like efficiency. If you could unload a ship faster and more efficiently and get the goods to where they're supposed to go, businesses end up being more profitable. Like that's part of the thing that drives down inflation, that drives corporate growth. Like this is all stuff you want to happen. So fighting against it seems a little like short-sighted. But look, I get it. Like the folks, the longshoremen don't want to learn how to manage the AI systems that drive all of the automation. They know what they do. They know what they know. So you have to have advancement, but you also don't want to put a bunch of people out of work. It's an interesting, you're transitioning the work, right, to different folks to just be more efficient. But yeah, it was not great, especially the position that they put themselves in, right? They ended up getting, I think the what was the phrase he said? I'll break you, I'll bring you to your knees, right? The guy that was kind of really boisterous about all of the shipping, the strike. I think, it just ended up looking pretty bad, right? Because it's like you're hurting people in the middle class, which is not what we want to do, right? So, I'm glad to see that it seems like it's come to a conclusion, and then we're able to move on from there. Now, you're going to have a wage increase here, right, for a lot of this. I think that's what they negotiated, right? A 60% wage increase. Is that what the number was?
Good for them.
Yeah. So somebody was making money that was probably not being fair to them to be able to afford that change. So there's probably something in there that's right. But
your Costco toilet paper will go up. They gotta.
You think we import toilet paper? I don't think so.
I have no idea. I have no idea. No. I will tell you that this reminds me of. So you're familiar with Milton Friedman, one of the famous economists, and I'm going to botch this because I'm doing it from memory. But the story was he was in an Asian country, somewhere in Asia, and there was a government bureaucrat, and he was asking them why they aren't using like tractors and better equipment and that type of stuff. Why are they just using shovels? And the government bureaucrat said, you don't understand, this is the jobs program. And they were trying to build a new canal. So Freeman's response was, and I actually just pulled it up here. Oh, I thought you were trying to build a canal. If it's jobs you want, then you should give these workers spoons, not shovels.
Okay.
You get it, right?
I get it.
Yeah.
I get it.
Yeah. Why stop it? Yeah, you should use a tractor.
You make it harder that it takes them longer to do the job. Yep,
I got it. Yeah, if you want a jobs program, give them spoons. I thought I'd get a better reaction from that.
No, look, this topic is just, it's annoying, right? I'm trying not to say,
All right, fine.
Scathing.
Fine. Let's talk about VIX. We got to talk about VIX. Jay, I don't know if you noticed this. We are at all-time highs again. Did we make another all-time high today?
It was close. It was an almost. It was an almost, right? So the closing all-time high on the S&P, 57.62. Today we closed at 57.51. So, 10 points off, 11 points off. It's pretty darn close to an all-time high.
Okay. The reason why I bring this up and is the VIX too high to be at an all-time high, Jay?
Yeah, so the VIX is at 19, right? 19.2. That's, to me, that seems fairly elevated as you're hitting an all-time high, right? Like, we watch this. There are times where the VIX has got a 13 handle as it's, as we're hitting all-time highs. To see 19 feels a little high to me for recent history, meaning the last 10, 15 years. And I think, that's one of those things that I go, is it signaling something else? Is the options market signaling something else? The fact that it didn't really, sell off today as the market was up 90 basis points, it was only down, 6%. Seems it feels a little high, 19 VIX, I got to tell you. Even the VVIX at 110 feels a little high for an all-time high.
It does. And it doesn't mean that anything is going to happen. It could be that people are more scared than they need to be, or they are. I mean, people are having to pay up for protection, especially in the short term. If you look at the VIX curve, Jay, and I know you watch this, it's pretty steep at the front end. I mean, if I look at the futures, 20.52, I think is the near future. Is that the October one? Yep.
October, yep.
Yeah, you go to November, it's 19.32. Of course, we always say this public service announcement, the spot VIX, the one you see on CNBC, can't trade that. The products that do trade are the futures. So if you can imagine for the audience, Jay, it's high, and then if you're drawing a chart, you bring it back down and then make a little dip and then come back up. But it's pretty high on the front end. Like it's...
well, this is the period that we've been talking about for months now, that this is where the volatility is kind of being baked in, right? October in advance of an election can get a little dicey. So, even though, the market seems to be really close to an all-time high, it doesn't take away that potential fear of what you can have going into an election. And, we talked about September being the worst month of the year in general. Not this year, right? We had an all-time high in September of this year. That's unusual, especially in an election year. And you and I talked a little bit about, being a contrarian here, that what seemed like the obvious trade just might be the exact opposite of what's happening. And, we started out the beginning of the year saying, watch out for the volatility in September, October. We might have got it in August, right? The market can have this wrong, but the reason, I think the obvious reason why the VIX is holding so high despite the all-time high is kind of the pending news, right, of everything. Like, think about this. You've got, an escalating conflict in the Middle East with Israel. You've got the election going on here in the U.S. We could talk about a couple other things that are going on that could drive this, but there's reasons to have an elevated VIX right now, especially going into October, which can be one of the most volatile months. I, will continue to, at this point, I'm the contrarian, and I say, it may do exactly the opposite of what everybody thinks. It may not be such a bad October.
I mean, I can't get a feel necessarily. So the polls, and by the way, I'll just Spencer Wright and myself will do our election preview show. We're going to do it as a segment, and it will be we'll back it up to, Jay, what you and I do. Probably the weekend, the last weekend before the election. But do you think? I mean, I can't get a sense. It's basically tied right now in the polls, pretty much within the margin of error. I will tell you that Trump is outperforming in some of the swing states, and don't worry, Jay, I'm not going to get too deep in the weeds here. But like if you look at Wisconsin as an example, Wisconsin is. Let's see. I think Trump is maybe down by 0.5%. He was trailing Biden. Biden was +6 in 20, and Clinton was +5.5. It is interesting. Some of the swing states, he's outperforming his prior numbers, and nationally, he's pretty much at this point where he was on election day against Hillary Clinton. I bring this up because is it smarter than everybody? And it says, hey, we'd rather have Trump. I'm making a presumption here. And you and I know it doesn't matter. But is this causing the all-time high and the volatilities because, what if it swings the other way? I don't know. But maybe it's just the Middle East stuff and the port strike and everything else.
Yeah, sure. But look, port strike, kind of seems to be resolved. You got the jobs number today, seems to be resolved. Those are things that usually would you'd see a drain out of volatility, right? We call it the volatility crush, right? But we didn't really get that. We did not get that. So, the competing things of got the news out, you got the strike behind, maybe, but it looks like behind us, you got this other news pending between what's going on with Israel and you got what's happening with the election. I don't know, Derek, but the market can be wrong, right? I mean, the market is not all knowing. And especially when you look at the VIX, to me, it's the best way to gauge the emotional bias of the market. And it's a little fearful despite the high. I'll tell you, today kind of felt like look, you and I talk about patterns from time to time. It's a nice hammer pattern today. That's a candlestick pattern that can be considered bullish. You get two of these in a row. You and I have talked about double hammers in the past. That seems fairly bullish.
Double hammers is going to be if I ever start a band.
You're going to call it double hammers?
Double hammers.
Double hammers. Look, you got the first one in. We'll see what Monday does here, but it's just a pattern where, the market, starts high, goes down, rebounds from it, and closes at or near, sometimes above, sometimes slightly below where it started. That pattern is what happened today. If you look at reversals or you look at, continuations of up markets, a hammer's a good thing. So, it's hard to, you got to, the VIX is telling you be careful. The market itself, the patterns, the price action is not throwing off anything that's all that scary.
Well, no, I mean, and we talked about this triple top that we had, the cup with handle. We broke above the old resistance, and when you break above, the old resistance becomes the floor. I would say, right around that 56.67, 56.68 level, that's now your support. And the market tried to rally back into it, bounced, and went back up. So from a technical perspective, until otherwise proven wrong, I would say that's your support. Like if it breaks down back below there, you kind of say, okay, do we come back into the old pattern, or we'll see. We'll see what happens.
Yeah. It's hard to know here, but I am going to continue to take the contrarian position because it's just feels like fun to do that. It's not changing any of our strategies, right?
Well, it's a good time for call selling, right?
Look, if you had shares to sell, like this is the nice thing about volatility high while the market is high. That's the time we like selling calls in those scenarios, right? Not even call spreads, right? So, from time to time, we use call spreads in some of our strategies to kind of capture some upside if the market keeps going. But I would, there are times as you're hitting kind of new highs on tickers or even markets, selling a call is a way to capitalize on that. I think we'll probably check our higher high data, but, watch for the end of October and that, that range of 6,000 is kind of being something you could potentially be up against, right? Doesn't always happen, but as the markets make new highs, you tend to go a little higher, right? 3% happens at least half the time after you hit a new high. So we're not there today. Maybe next week it just continues to press higher. I don't know. I'm not making a market call here, but I'm certainly not saying.
I thought you were. Hang on, I got my pen out.
No. But it feels like as you're trading options, higher volatility while the market's high sets up nicely for selling calls. If your hedges are probably holding plenty of their value too. If you're hedging, I don't think we didn't roll any hedges this week in any of our portfolios. So letting everything stand as is when it comes to that side of it.
But further out, I mean, it's gotten a little bit more expensive, but no, not really. And so, like a lot of the strategies we run, we might hedge longer and then take some volatility, sell some upside call volatility a little closer in to take advantage of that. But yeah, I mean, it's really this, like you said, it's the October. You're looking at the volatility or the VIX curve, the VIX futures curve. It's October right now. It's the near month that is the inflated one, it's only inflated if it turns out that the markets don't go down precipitously from here. But we'll see.
We shall.
But you've by the way, I don't know if I asked you this. This is a good example of the markets going up and the VIX going up. VIX is down from where it was 2 days ago, but we're right around all-time highs, and the VIX was over 20.
It can happen.
Yes.
It can happen. Everybody thinks as markets go up, the VIX has to go down, right? That's not always true. You could look, and it's more evident in individual tickers, but this is, again, I think it's a fairly unusual scenario to have a 19 VIX as you get to an all-time high, right? So I think it's fun to talk about this, but you could look at individual tickers. Like if you were to look at Tesla, for example, right? It's a popular stock, one of the most actively traded stocks out there.
I've heard that.
You like that one? You like
I've
Tesla?
heard it. I've heard of that one.
You've heard of those guys. Yeah. So like you look at Tesla and you track its volatility. So let's just take a recent history, right? Back in August, the dip in August of early August, Tesla was trading around $190. Maybe like forget about the day of that sell-off, everything spiked. But let's just take a week later, right? Tesla's trading just under $200. The implied volatility was 50, right? So that's the equivalent of like a 50 VIX. Today closed at 250. So it's up $50 on 200. Quick math says that's a plus 25%. I could be wrong, but that's what my math says. But the volatility is now trading in the 70s. So it's gone from a 50 to a 70 volatility, yet the stock itself has gone up 50 points. Now, Tesla has a unique event coming up, right? I think they're talking about the robotaxi stuff coming up next week. So maybe that's not a great example. You could find other examples, though, where sometimes there's events coming. And that ties back to what I was talking about. There may be events keeping volatility high despite the all-time highs. And by the way, Tesla's not at an all-time high, but it's pretty darn close, right? I mean, let's call it recent highs, right? It's bounced off 274 times in the past year. I just told you we closed at 250. We're very close to that level. You look on a chart, you feel like you're at the high. By the way, nice cup and handle pattern on Tesla, nice inverse head and shoulders on Tesla. Not making any calls on Tesla, but interesting things are getting set up for Tesla. I'll add to this point here. There's an event coming up. Volatility goes up, even though the stock is going up. That could be what we're seeing now with equity markets as well. By the way, just because vol up doesn't mean that the big move or the way volatility comes down is that it goes down. It could have the spike higher, right? You can have this tremendous move higher. You might have quick resolution Israel. You might have, we won't have a quick resolution for the election. We're a month away on that. You can't get that one done early. But once it's done, you can definitely have a snap higher. And as the market has higher volatility, it generally tends to tell you whenever the snap comes, it's going to be bigger than a usual move, right? So that's what it's projecting there. Don't know up or down, but it doesn't mean that once the news comes off, the market, is gonna tank. It doesn't mean that, especially at a higher vol. Flip side of that argument is the buy the rumor, sell the news. Are we going through that phase right now? Don't know. It's usually an individual stock thing, not a general market thing. But you have to consider that to the other side. The buy the rumor, sell the news might be you might get resolution to everything, and the market, says, okay, that was great. Don't know what else to look for. I'm going down. One other thing to think about, Derek, earnings is around the corner. There's a lot going on right now, right? So take it for what it's worth. A lot of things to watch out for.
By the way, do everyone keeps saying robotaxis are years and years away. Do you know that Waymo is operating robotaxis in Arizona?
I do know that. They haven't killed many people, as I've heard.
I'm not aware of that, but
they haven't, is what I'm saying.
I might have to. You know what? I'm going to take one of these.
I didn't say they killed any people.
I'm actually. I don't know how far I'll go. I might just take it like up the block. Like, it'll be weird. What do you do? You just get? Do they have a driver in there too, or you just get in the car? And
I don't know. I think you just get in. I don't even think there's a steering wheel in the car.
I'm looking at it right now. Waymo.com. You can pull up an app.
I think for the show you should drive one and you should take one and come back and tell us all what it's like.
I'm totally going to do this. Like, if this is real, this is interesting. I don't know how I'd feel about taking it far though. Be like,
Have your wife follow you in the car so she can bring you back.
Do you remember the one in what was the show? Was it Silicon Valley? Where
Yes.
it pulls into on the container ship and he can't get out. He winds up being shipped across the world because
HBO show.
Yeah, the HBO show. All right. No, I may do this. They're at the Phoenix, San Francisco, Los Angeles, and Austin. I should totally do this. I really should. They don't have it in Florida yet. I'm surprised.
No, not in Florida. They'll probably steal the cars. Anyway, hey, I got another example for you to look at. And This is a good one. So take a look at Alibaba, another stock that is blowing through highs for the year, right? It's obviously associated with the stimulus that's been discussed in China.
Oh, wow. Look at that IV.
Yeah. So it was, Alibaba's trading at 85 back on September 18th. Today, trading at 114. So up, let's call it $30 on an $85 stock. Nice gain. But the implied volatility over that same period has gone from 30 to 56. So almost double implied volatility while the stock is going up. So another example of fast-moving stocks could be up or down, will also spike implied volatility. I mean, that one's been fun to trade. We have a fund that holds that underlying one of the yield maxes that we trade. But, just interesting to watch those scenarios where volatility can go up as stocks are pushing highs.
In Nvidia, by the way, none of these stocks that Jay or I are looking at, like, we're not, this doesn't change. Like, we're just sort of going
we're using it as examples. Those aren't recommendations.
Yeah. Like, don't trade any of this stuff, really. Like, we buy, we hedge. That's the core thing we do. We sell volatility. Actually, we do a lot more than just do that. But Nvidia, Jay, look at the pattern on that. If you look at the daily chart, it's almost a wedge forming.
Oh, that's a wedge. And what is a wedge? A wedge is usually a continuation pattern, right?
Well, it's going to resolve up or down. And if it resolves out of the wedge to the upside, you would say it's a continuation. And then the target is the sort of the mouth of the wedge, the open, the distance there, you theorize. But
would you say that's 80 to 140? 90 to 140, right? So that's a 50 point.
Nvidia's 124 right now. So
but I'm saying the wedge, the mouth of the wedge, right? That's what I'm saying, right? So if what you're saying is you have this potential for, if that's the way it goes, you got a potential 40, 45 point move from this 124 level. Interesting.
Yeah. And the thing is, when you look at a chart, when you see this kind of wedge, is a series of lower highs and a series of higher lows. So you kind of get it. Eventually, it sort of comes to a point, and it's got to resolve itself. So that would be an interesting one.
Consolidation, a triangle, a lot of things going on with that one. But the market seems to, the way Nvidia goes, the market seems to go. Although the market's hitting, we just talked about highs, while Nvidia is not at its highest level, right? We just talked about being off from 140 at 125. So you can get participation, and we talked about this last week, you can get participation of other stocks pushing the market higher. But if the leaders take off again, that's always interesting, right? We used to talk a lot about that with Apple, right?
Yep.
Same scenario. Apple has a little wedge forming here, Derek. It's not as pronounced, but higher lows, lower highs. Same thing if you look back from July. Interesting dynamic on that one.
Oil is the thing that has been depressed, and with some of the stuff going on, that spike. We've got a strategy where that had an 8% allocation, and it's actually the most profitable thing in the portfolio, which is why we built some of these model portfolios, different pieces acting differently at different times. But that you look at something like USO or PDBC, I think that's the right symbol. Sometimes I reverse it and it's something else.
Yeah, PDBC. Yep, that's the commodity ETF. Yep.
Is that PDBC? I have the right. It's not PBDC, right? That's something different. No, PDBC. But yeah, these were like, this is a 10% move off the bottom. Yeah.
Take a look at Exxon based on what you were just saying, right? Look at XOM.
Yeah.
That's
That's a better looking chart, actually.
It is breaking out. Volatility's up, right? IV is going up as Exxon is going up. See the same thing in the USO. USO is a little different chart. So Exxon seems to be a better chart than what USO looks like. USO being let me get the official name of that right. It's the United States Oil ETF. It's had a nice run. Really, let's say of those lows of the middle of September. This one feels like it is more related to the Middle East, especially if Israel is going to, who knows what happens this weekend. This might be old news by the time people hear this, but if it's going to attack, Iranian energy locations, right? So that's kind of pushing oil up. Although midday we had a little sell-off. I think there was some news about it, and I missed it. I did see kind of the change in USO throughout the day. Still up, though, today, 80 basis points, and trading at 76 after being down as low as 67. So 9-point move on a 67 in stock or ETF just a few weeks. Again, all those things, rising volatility, rising underlying, that could always move those things, right? We have USOs included in some of the other funds that we manage. So it's all interesting stuff. Let's talk about one that is just not, I don't want it to seem like we're cherry picking.
Well, it's our podcast. We can do whatever we want.
Look at Moderna. Can somebody save that company? It's just like, ugh. Sorry, Moderna. You're down from 170 to 59.
But is it surprising when didn't they really only have one product? And I don't know that product people really aren't demanding that anymore.
I guess, but they were supposed to, they're reconfiguring the way vaccines are made, but I guess not so great right now.
I mean,
not a great one.
I don't know. Wasn't it for a while though? Pretty much major governments around the world were just handing them money to pre-order. Like that's good business. If you can get into something where you get government contracts, that's great. It's great business.
We should launch some government contract work.
I'll get right on that. So
how about gold, Derek? You like gold too?
Well, I mean, it keeps going all-time highs. I mean,
I should have brought my Walmart gold and taken a picture and sent it to you. I've ended up buying 3 little bars of Walmart gold.
So eventually, you got to take those together and then get like a mini bar or something.
I'll melt them in a little backyard, put them in the chiminea, melt it together.
Probably not the best. I would not advise.
No, don't do that.
Anyone else
start smelting my own gold.
Don't smelt your own gold.
Yeah.
But gold and TIPS bonds are working.
Yeah.
TIPS bonds are working. They're still. So I was on a call this morning with one of the strategists at State Street, and we were talking about the break-even rates on TIPS bonds. So break-even is sort of where inflation is if you're indifferent of buying, let's say, a 2-year bond or buying the TIP. And I think the break-even, it was like 1.96, meaning the TIPS bonds are pricing in much lower inflation than we have right now. It's kind of a little mismatch. I haven't thought about beyond that, but it came up.
They didn't have a great day today, but that's just because interest rates, did not go in their favor, right? Interest rates up, bonds down. So they ended up experiencing some of that regardless.
Yeah, which is why in 22, everyone's like, oh, this is the no-brainer. I'm going to buy TIPS bonds, Treasury inflation protected security bonds. No, they had a bad year. They didn't do what people thought they were, which surprised some people. And they have duration. Interest rates go down, these go up. And it's an interesting thing. We first highlighted those on our contrarian corner. We occasionally do that. And because if you buy a TIPS bond, if you just buy an actual bond, there's a floor. You basically can't get less than par back. Of course, you buy it above par, you can go down to par. But yeah, it's kind of an interesting area. All right, well, don't do any of that stuff, what we just told you. If you want to do it, but I'm not telling you.
It's all just, we didn't say to do anything, but it's just all different positions, different asset classes, looking at the volatility of it all.
Yeah.
Interesting story there.
Yeah. All right. Well, Derek.Moore at ZegaInvestments.com if you want to know about how we hedge, about how we, how we run the different portfolios. That's DEREK.MOORE at Z as in zebra, E as in Eddie, G as in George, A as in Apple. Investments is up to you to spell correctly. If you can't do that, you can't reach us. Okay. I have this Waymo thing up. Like, I just want to take it like 3 blocks. I want to see what happens. Like, go where I don't have to go through any intersections.
Just put your dog in it. Take the dog for a ride. Take it to the vet. You'll meet the dog at the vet. Put the dog in the...
He doesn't like going. It's weird. So when we've had to take him to the vet, he does not like it. And he like knows it's the vet. And then I went online. There's a bunch of videos of people showing like when the dog is all happy-go-lucky, it's all chilling out in the seat. And all of a sudden they realize they're in the parking lot at the vet and they start freaking out. I don't know if you know that.
My dog also does not like to go to the vet, but I don't know if I've ever had a dog that did like going to the vet. So,
well, I think the first time, and then he's like, I know what goes on here.
This place is no good for me. I'm out of here. They remember.
What else? I think that's it, Jay. I think we've covered everything. What's next week? Is it Fed minutes that come out?
You're the market news guy. I think you're right though.
Yeah, I'm just pulling it up right now. Well, I'm always right. We know that.
I mean, you're always right on
No,
CPI.
CPI is next week.
Oh, okay.
CPI and PPI. So, yeah, I would say, so we have the employment stuff. The estimate or the survey is 0.1%. Prior was 0.2%. And the year over year, the survey, the expected is 2.3. The prior was 2.5. So, I mean, I guess that's a fly in the ointment thing, maybe, if CPI comes in a little hot. Although, remember, if CPI comes in hot, these clowns who were like, oh, I want really bad news, so the Fed lowers rates. Does that mean the market rallies on that?
No, that's the one you don't want the bad news for. Okay. That's the one you want, that one coming in low for the rate lowering clowns. You're going to come up with a name for those guys.
Yes.
Yeah.
Yes.
Well, and banks, I think, are Friday, right? JP Morgan announces Friday, probably Bank of America. I don't know. I didn't look at Bank of America, but JP Morgan's Friday.
Is that coming already?
Yeah, man. It's Friday morning. Next Friday morning, the 11th. So earnings are starting. Day.
Did you talk to JP Morgan about your 0.01% interest rate on your checking?
They called me and asked if I'd like to invest in their wealth business. I was like, pretty sure I got that covered. Sorry, guys.
Pretty good, yeah.
Sure.
I mean, I get the emails because I have their Chase Sapphire card, the one where you get all the points.
I've got a Sapphire. It's not bad.
Yeah, no, but I always get the emails. Would you like to have a free portfolio review? And I don't take them up on that. I don't have next week's earnings yet. I usually get a little preview there, but yeah, I can't believe it's happening already. Okay. I finished. Well, I'm up again. Apple TV Plus. Let me just talk into the camera. We don't have a camera, but if I did, I would talk into the camera and say, "Come on, just drop all the episodes."
You've got a lot of places you could say that to. You could say that to Paramount Plus. The only one you really can't say to is Netflix. And now they're pulling this thing like, oh, we're going to give you 4 episodes and then come back in 2 months and we'll give you the rest of the series. That's happened for a couple things. But they all do this. Like, I don't know why you're surprised. HBO does it, or Max does it. Apple does it. They keep you coming back. You still need that weekly fix. So you're not done with Bad Monkey?
Well, I'm done watching all the episodes that are available to me.
It feels like it's almost over, right?
I think it has one more show. I've enjoyed it, but I would have enjoyed it. Just give it to me all at once.
You could have just waited 8 weeks.
That's a good point.
I did that with your Dark Matter recommendation, and then I was annoyed with you at the end because you made me watch that whole thing. So.
Well, I never finished watching it because I was like, the book was really good, and this doesn't seem good. But
I would. Yeah, it was a meh. It was a meh.
Well, read the book. I think if you read the book,
you know what I'm watching now is the new episodes of Tulsa King. I talked about that last time. Sylvester Stallone, Mafia, Mob Show.
I liked the first season.
It was pretty good. So yeah, new season is out.
Can I tell you? So HBO has been running, like one of their, you get like 17 HBOs. One of them is running nonstop The Sopranos in sequential order. And I came to that,
my favorite.
but I came to that show late. And back then, when that was on, like you couldn't go back and just watch. So I started watching that late.
You'd have to buy the VHS. I have the box set of VHSs for The Sopranos, my friend.
Yeah. Well, I watched the first season. I'd never seen the first season. So it was kind of interesting to see that.
The mother's such a good character.
Yes.
Yeah.
Yeah. But
you want to hate her.
Well, you do. But,
warning. I know. She's great.
That show, though, I think was one of the first ones that actually would write off characters.
And bounce around. Wow. It was just the format was so unique. It was great. And then, you and I being former Jersey guys, we liked that it took place where we grew up in Bergen County.
That's right. It did.
Yep.
I never went to Pizza Land, though. Did you ever go to Pizza Land?
Sure.
Did you?
Oh, yeah.
Was it any good?
Yeah.
Where is that? Is that Bayonne or is that?
No, it's farther north, like northwest a little bit.
Pizza Land, New Jersey. All right, I'm going to look it up.
I think so.
Pizza Land, Belleville Turnpike, North Arlington.
Yeah.
So for anyone who doesn't know why we're even talking about Pizza Land, it's in the opening credits of The Sopranos when he's driving. So you get there.
You got that sound, that song playing.
Yep.
Yeah.
All right. The only thing I'm going to watch this weekend is we're coming up on NHL hockey. And I know we heard from one of our listeners, Derek, who was an Ottawa Senators fan. They're a frisky team. They got a new goalie. They have Brady Tkachuk. They could make a run at the playoffs. Maybe I'd like to see them in there.
Doesn't everybody make the playoffs in hockey?
No, that's not true.
I thought that's every team makes it.
Nope, there's 16 teams that make the playoffs.
Out of how many teams? 18?
No, there's like 32 teams.
It used to be like 4 out of 5 of each division would make it or something like that. I know it's...
Yeah, when it was like the Patrick division and... Yeah, like the Devils wouldn't make it, but everybody else would.
But everybody else would.
And then the Devils got really good. I remember I went to the Stanley Cup Finals when they won the Cup in...
Did you paint your face like Putty did?
No, I didn't. New Jersey Devils, yeah. If you don't watch Seinfeld, you don't get that. So Amazon Prime, let me get to this. Amazon Prime is, I think it dropped today. There's 6 episodes, and they're going to follow different players around. One of them is with Matthew Tkachuk, your own Florida Panthers, Shay. I know you love them, Stanley Cup winners. So I'm going to check that out. And I think it's in the same, I don't know, docudrama, but it's like, like Drive to Survive. So unfortunately in Arizona, we lost the Coyotes to Utah. And we haven't even named them yet. Yeah, we lost our hockey team. So I might just, maybe I'll just adopt the Panthers. So.
Is that my team, the Panthers?
Oh, for God's sakes. Yes.
Okay.
Yes.
Sorry.
You need to go to a game this year.
All right.
I don't know what's wrong with you. All right. That's it, Jay. We're done. We'll be back next week with more analysis that might be good or might be bad, but we'll let you know. And if you can do us a favor, we never really asked this. We would like some 5-star reviews. They seem to help for whatever reason. So if you're not going to give 5 stars, don't bother. Like we only want 5 stars. And do share these episodes with friends or even people who aren't friends. You can still share it. That's it. All right, Jay. Thanks. See you
next week. Bye, Derek.